Good morning, good afternoon, good evening. Today with us to talk about why climate tech startups need techno-economic analysis, we have Dr. Melissa Ball from Energy Impact Partners, EIP for short, one of the most active climate tech investors in the world, and a dear partner of SOSV. So Melissa, you're a chemist, and you're also a business graduate. And you mentioned to me that you prepared a few slides, and those are part of a course you give at Princeton. Is that right? Columbia.
It was actually for Colombia.
Columbia. Sorry, Princeton.
No
Columbia.
worries.
So you'll get some of that for free today in the audience. And if you have any questions, you're welcome to use the Q&A tab at the bottom of the screen to ask some questions. Please keep it on topic. No pitches, no self-introductions. Really stay on the topic of techno-economic analysis. You can give a little bit of detail about what you're doing if you'd like, but stay on topic and keep it short. So after the first part where Melissa will tell us more about what they mean by techno-economic analysis, we might not be all fluent in the language. Then we'll take some time for questions, and you will be welcome to ask even more things. All right, so that's all for me. Now I'll leave the floor to Melissa to talk about TEA. Over to you, Melissa.
Wonderful. Hi, everyone. Very nice to be with you all here. My name is Melissa. I am on the investment team here at Energy Impact Partners. I'm on our Deep Decarbonization Frontier Fund. So we're the early stage fund at EIP that takes on technical risk. So how we like to think about it internally is if the technology has technical risk, it's usually a good fit for our fund. The thing that I think makes us very unique amongst many is who our partners are. So historically, our partners are the big gas utilities of the US and Europe and Asia. And that's really expanded in the last few years. And I think that's very a function of all these climate mandates across different industries. And so now our coalition of partners is really, we still have those core utilities that have been with us for, 8 years now, but it's expanded to how I like to group it as the energy producers, consumers, and users of the world. So think everything from real estate to industrials to metals and mining to the big hyperscalers and everything in between. And, in-house, we are about 100 people, and I would say about a third of our headcount is what we like to call our research and innovation team. And that's really the team that manages, amongst many things, like top-down sector research across different themes, but they also are responsible for managing our relationships with our limited partners and our portfolio companies. And so often our LPs are some of the first to demo and pilot some of the technologies that we're investing in. So it's a really nice platform there. And I have here at the bottom of the slide, the latest number I have is we've generated $3 billion in bookings for our portfolio companies just from our LPs alone. I should say my background, it's been said, it's technical. So on the investment team on our, as I say, we take on technical risk. So when you take on technical risk, I think it's a good thing when you hire technical people. So I'm one of the two trained scientists on the team. So I never discuss term sheets. I'm always discussing techno-economics, which is what we will talk about. So I did my PhD here in New York City at Columbia and focused on organic synthesis. From my PhD, I did a postdoc down at the Anlinger Center for Energy and the Environment at Princeton. And there I was a postdoc for 3 years. And instead of doing in synthetic chemistry, I really wanted to learn how to make solar devices. And so I was in a group that did both organic solar cells, which is a lot of jargon, and happy to answer questions on what that means. And also I did some perovskite solar cells. And so got to help lead a team of graduate students and undergrads there before joining EIP, which I've been here now over 2 years. And the main part of my function really is on finding technologies that we want to invest in. And once we find technologies, my main role in the investment team is ensuring, when someone's pitching us, is making sure no fundamental laws of thermodynamics have been broken, looking at trying to benchmark a technology relative to state of the art, which is a bit of a buzzword. And like, what is the right benchmark is certainly a question that we get asked a lot and think about a lot. And that really what is core to that is techno-economic modeling. And so I would say like engineers tend to know what that means or sometimes know what that means. I will say as a PhD chemist before this role, I had some idea from reading academic papers what this topic would be about. I certainly would say I was not, I think it was newer to me. So it's been a pretty sharp learning curve and really fun. And I think it's really just a function of like how I like to think about it is like techno-economics is really I would say the intersection of like when you've got a super cool technology in the lab and then trying to commercialize it. So it's really I would say the analysis tool that you need in order to understand how your technology, besides just being super cool, actually could have some commercial relevance. And so, in the simplest way I like to think about it is that, it's a tool that allows one to assess the value of their technology with the cost to deliver it. And so, if you can think about the value of your technology as a function of what does it do, who is willing to pay. So depending on what your technology is, the end customer might have a certain willingness to pay, or you can see some fields or some technologies are in markets that will not absorb a green premium, while there's others that certainly will. And then, is the value there? Are you solving a big pain point? So one of my colleagues and friends likes to put us like, is the technology a nice to have or a need to have? Is it a vitamin or is it an aspirin? So that would be like the function of what the value of your technology is. And in reality, you just need it to be greater than its cost. And so the cost is really a function of the system design and then certain technical metrics that fall into that. So there'll be sensitivities in your particular technology, and so we certainly attribute those to the cost. And at the most fundamental level, the way we're thinking about it is this technology going to be better and cheaper than the alternative, and then that alternative really is something that I'm happy to go more into because some will ask, does that mean it's just cheaper than the other competitors that are working within a particular decarbonization space that might have a green premium, or is the alternative what is like currently being done in the market? And those benchmarks are obviously quite different. And so why do I think that climate tech's needed? I would say if you're, and I should say my fund, like we would say we invest seed to Series B. Our sweet spot is somewhere in the Series A. Most techno-economic models, today based on metrics today, I would say more often than not impossible, but they don't pencil. So when you're first developing a technology, you're not at scale. You might be buying your chemicals from Sigma Aldrich as opposed to getting large bulk volume chemical purchasing. You are buying one-off pieces of CapEx, which are going to, and then smaller, like, maybe on the gram scale or kilogram scale and not on the world tonnage scale. All of those will contribute to higher costs. So when we receive a TEA, I don't ever expect that today that it pencils. But what the TA will allow you to do is it really highlights the sensitivities and the limits of your technology. It will really show you what is important and what is not important, especially if you're just starting out on your technical development plan and you've got a small and lean team. You might not have, like, you have to focus on which problems to solve, and the TEA will really suggest and point to problems that are worth solving right now today. It will help you to also, and really importantly, define targets about where you need to be in order to go down, from going uneconomic maybe today to all the way going to future to being economic. And so it will really show you the targets that you must hit and then help develop a technical plan to reach it. And then importantly, it's going to help you understand once you hit those targets, can your technology compete today against the incumbent? If not, what needs to change? Do you need to believe in some kind of supply side or market intervention? Do you need to believe in that the market will absorb a green premium? There's many ways that this could operate. So essentially, I think of a TEA as the roadmap. It's a tool that you will have. It's like a living document that you will have as a founder that will help you understand today where you are, what metrics are important, where are the sensitivities in your technology, and where should your very small and nimble team be focusing in order to hit those metrics in time. And so I did a small example kind of I think hopefully summarizing what this means. So like the first thing we look for is like, if I were a founder looking at a new technology, is I would determine my value prop. So a good example is e-methanol, which is like a power to liquids play. And so on the left side, here I'm showing the problem is that 170 million tons of fossil-based methanol is produced per year, emitting half a gigaton of CO2. So basically 0.5% of all emissions are coming from methanol production. And the reason is we use on the left side, the two reagents are called syngas. And how we make hydrogen today at scale is a process called steam methane reforming. And so the details are once you understand the inputs into the methanol process and then also just the methanol itself, you can see that to produce a kilo of methanol, you're going to have a large carbon input and impact. The opportunity here, though, and why this potentially could be something that, there are lots of maybe people on this call, but certainly I've talked to lots of people in this space that are working on methanol, is that if you could produce a carbon-free methanol with no GHG emission, it's a large total addressable market, so TAM. So it's a really nice market because if you get a slice of that, you can have a really nicely scaled business. You could have zero impact on GHG emissions. And there's several ways one can do this, but I'm showing here one way where you could use CO2 and green hydrogen or yellow hydrogen, whatever clean hydrogen that you want, you can use as an input, and you feed that into a process to make methanol in water. And so in this process, the next thing that we think about once you have the value prop, so you know that you're working on a technology that is an aspirin and not a vitamin, it's a large enough market to play in, and you see like there's a clear value prop to solve this, then it's really about modeling the process and what is it going to cost. And one of the things that we think a lot about is, and here I'm just obviously doing a very high level, is that, if I, in my system boundary here, and system boundary, I just mean is like, this would be if you were building the technology, what you would have to think about in terms of your system is that it's going to take two feedstocks, like I just said before, CO2 and hydrogen, and then you have it into a methanol reactor, and there you would then have your methanol. Now, upstream of your hydrogen and CO2, you've got to think about how you're going to get those with minimal or limited GHG impact. And as I said, you can have hydrogen electrolysis, so green hydrogen that would feed in, or you could have, in your CO2, you could do point source or direct air capture that could get your CO2. And essentially, the cost is going to be a function of, if we think about the green for a second, it's your feedstock cost. It's going to be the energy that you're going to need in order to produce those feedstocks, and or if your reaction requires an energy input, then you would need to think about the energy. You would think about operations and maintenance, consumables, and then from a capital standpoint, in your system boundary here, you would think about your methanol reactor and maybe some storage tanks as well that would feed into your CapEx. And so when we talk to people, I think especially if you're in an early stage of development, a techno-economic model does not need to be this multi-tab exercise. In fact, like even if we call it a lot internally, like a simple 10-liner really will help. I would say focus efforts on what's important and what's not. And what I try to do here is just give a really simple example. Again, still staying on this methanol example, is where I would say you have certain inputs, yield. So under my inputs, like we said before, it's hydrogen and CO2, and I put some targets here. And I was just playing with numbers. It's not necessarily, the numbers are less important here, but I would say in the spirit of setting metrics, you'll know what's important once you do it. Your energy inputs, an energy price, what do you think you're going to be paying for that kilowatt hour electric here in our case? O&M, your total installed capital cost. That's probably the hardest metric at an early stage to determine, and certainly can help answer questions on how we think about that. There's something called a capital recovery factor that helps you amortize your CapEx. And then importantly, something called your capacity factor, where essentially if you're tying your technology to renewables and the sun only shines 6 hours a day, then your capacity factor would be a function of essentially how much power you're going to get over a given day. And then you have a set of outputs here where, again, it's like how much CO2 and hydrogen are going to be required for your process. You're then, as a function of how much is required and the price of that, you'll have your feedstock cost, your operating cost, your levelized cost, and then you've got a total cost of production. And importantly, once you have your total cost of production, like we've said a lot, once we look at our TEAs, the thing that I'm always thinking about is like, where are my sensitivities and limits? And when you get to this final number, it's usually a good time to step back and ask yourself, is that competitive? Is it not competitive? Are my inputs realistic? Like, is $1.50 a kilo of green hydrogen, is that a realistic cost target? Why or why not? 8 cents a kilowatt hour. What do we think about that? So there's lots of different ways to think about this, and you can certainly sensitize it in your model. And then on the right side, I'm showing, a bar chart that essentially is showing my outputs, and you can see clearly what's driving the cost. And what I did here is as an exercise is did gray methanol with my gray dashed lines. And that's really to show here where is gray methanol as a function of my technology. And so gray methanol, it's a commodity. It ranges in the market, let's say between $300 and $600 a kilo. And so really what I'm trying to show is like, okay, so today I'm not competitive. I can't compete. But in time, how can I actually lower my production cost to a sufficient point where I could produce at a price that would be competitive in the market? And on my last slide, things that we think about, I would say there's like 5 do's or don'ts of techno-economics. It's definitely an art and a science. And I would say the thing that we've learned on our team is that we have, as I mentioned, technical folks on our team and then the investment folks. And we work hand in hand together when we're diligencing companies to really try and fine tune our own inputs, our own assumptions. And what I would say is like that cross or that multidisciplinary approach, whether you're in academia, or you're in a startup, or you are an investor, it's, I'm admittedly here biased, but I think it's a real boon for climate tech. And so when we read lots of techno-economic analysis from lots of different companies and papers, et cetera, and I would say there's 5 core things that we think about a lot. And one I've kind of hinted at is like unreasonable assumptions. And so here I'm giving an example. Is sometimes we'll see someone's going to have 2 cents a kilowatt hour, and they're going to tell me they're going to access that 100% of the time. The issue we have with that is that if you're having really dirt cheap electrons, usually, except for some small pockets, maybe in the Pac Northwest, or maybe if you're in Quebec, or you've got like a really special situation where you have like hydro that's going to be 24 hours a day, that's going to be 2 cents. For most of us, that's not really a realistic input. And the reason is that it's that cheap power is usually be a function of renewables, and renewables have many things that are really amazing about them. One of the struggles we have with renewables is that the wind and the sun, the sun doesn't shine 24 hours a day, and the wind doesn't blow 24 hours a day. And so I would say that's one assumption, is like make sure your capacity factor, or how often you think you're going to be accessing power, and the price of that power are aligned in the market. And if they aren't aligned, then you can explain why, that's also fine. But this would be something I would say, don't take for granted that cheap electrons are there. The other, number 2, we put system boundary. And this is one where I would say we see often, or see pretty often, is where somebody will give a techno-economic model that's focused on like one part of a widget. But ultimately, what the end customer is going to care about is the total cost at a system level. And so even though your technology might be focusing on, let's say in our example, the methanol reactor, let's say you've got a really cool catalyst there, then that's your secret sauce. That's great. But if you were just to model your TEA was the methanol reactor independent of the inputs, which would be CO2 and hydrogen, you would be missing a huge part of your cost. And so I would say be really careful about system boundaries and what should and should not be included. The third one, we put apples to oranges. This happens often. So in the methanol case, and it's probably good as a visual. Sometimes I'll see like this price, let's say methanol, let's put it at the $500 a kilo for a ton of, $500 a ton of methanol. If your production cost was also $500 a ton, and you were comparing that to the selling price of today's methanol, the mismatch there is that a selling price does not equal a production cost. And the reason is that presumably it's a company, so it wants to make money. So if it's your production cost plus some margin would be equal to your selling price. So make sure that you're making a apples to apples comparison there. The fourth one is focusing on the wrong metric. So in the example that we put here, so I mentioned catalyst earlier. So let's say that your secret sauce is the catalyst and you got it working where, whatever technical metric that isn't very important. So if it could be turnover or it's going to be yield of product. And let's say it's already really good and, eking out another 2% increase in yield, it sounds maybe technically like a really fun challenge to work on, but perhaps at the TEA, a 2% increase in yield means very little in your bottom line. I would say that's probably like focusing on the wrong metric. You should really be focusing once you've got your good enough, and whatever that can mean will depend on the technology. It's probably a time then to switch that team to be focusing on really the drivers that will bring down the cost more. And then the last one I've also hinted at is this false precision. I would say if you're really early in your development, like I mentioned, like a 10-liner really will solve or answer lots and lots of questions that you have and will help, I would say, focus thoughts. Sometimes I can see where if others have fallen into the trap of almost over modeling, depending on your stage, of course, that maybe isn't needed. So if you're at the early stage, knowing exactly how many valves you're going to need and pipe diameter, et cetera, it might not matter at this time. It will eventually, but not now. And so I would say maybe in the beginning, simple is probably best. And so I'm going to maybe end here, and looks like I can leave time for questions. But I would say that you know for me, like techno-economics really is a tool for not just for investors that we're going to ask for it and how we're going to think about it, but it's really a tool that will allow uh, a startup to try and understand their own technology at a level of like going from like that cool thing on the bench to like actually deployed at scale and what that bridge looks like. And it will really help focus resources where I would say when you're starting out and resources are very finite, it really helps focus the resources on to solve the problems that are going to help make your technology take over the world and do all the good that you want it to do. So I'll pause there. Happy to answer any questions.
Excellent. So thanks, Melissa, for this great introduction on and pointing out some of the common problems you see in early techno-economic analysis. So I see that there's already a few questions lined up for our webinar here, and I'm going to take the ones that seem to have the most upvotes. Okay, well, let's start with a simple one. Do you use special software or tools to model the workflow of this type of analysis?
No, we do not use special software tools. I know there are some in the market. I've seen a couple in the market myself. I think the like I guess there's two ways we think it. We have our own, I would say, 10 liners across technology. So it gives us like a good sense of like I would say the sniff test or high level what we need to be thinking about. And once we're in diligence with a company, we're sensitizing and we're building out special nuances ourselves. So I would say my struggle with some of the platforms has been that it doesn't like it. We want to actually have more control of the inputs ourselves. I can definitely see as a startup where it could be very helpful. Um, if you feel like either if you're going to hire a consultant to do it, which I've seen people do, which can be really expensive, and or if you feel that it's a better use of funds or time to do it. But for us as investors, really we build them out from scratch.
And so the model is essentially a kind of a drawing on the spreadsheet.
It's really exactly. And it really depends. Like, again, if it's a seed versus a series B, our models can look very different. And it really can depend on the process. Like, let's say there's a process where feedstocks are really important and access to feedstocks and different diversities of feedstocks. We might need to have different scenarios of different feedstocks that feed in, which I don't think like a software platform um, I think just we're seeing such diversity, I guess, of technologies that like a software platform might not be the best use for us. And also, I think it's just more, this is what we like the control over inputs and how we think through it.
I'm going to ask a little, it's a half a joke, but have you ever seen a startup try to use ChatGPT to do that?
Um, I haven't seen it. I'm sure they have. I would actually say, like, ChatGPT and all these platforms, like we all use them. They're great. I would say from a tech, this is my own view, not EIP's view. From a technical perspective, I would be very careful. I think that the bias there is real, and I would say they get a lot of like technical, like quantitative information incorrect. And so I would say it's just better to either ask a technical person if there's like a quick question that you have, or do a literature search. I think a lot of it's there. And I would say certainly from an investor point of view, like again, like those 10 liners really, like I would say, are really helpful to have. And probably most startups can answer those questions themselves without Chat GPT. But yes, I would say it's a good sense check, but I would not rely on it for quantitative information.
Sure. So that was a question from Michael Yin. I'm going to take the second question in the list. That's somewhat related, actually. So, um, do you have some reference TEA models that people could use, to understand and like you showed one, but maybe you have some useful references that people can find.
So I believe, so I want to, and there's a couple of resources I can point you to. One, the academic literature, if you put in a technology, like, and I'll give an example, like green ammonia synthesis, Techno-Economics, you will find academic papers that have like very much built out TEAs that can be really good like learning tools and proxies for it.
Mm.
We don't hand out ours ourselves, but we do office hours, and from time to time, and we certainly are talking about doing more outreach in that way because I think it is really important. I also believe that Activate has an online TEA tool that you can like a tool that you can download to do it as well. So I would point them to that. Um, yeah, those would be my suggestions
Okay,
for sure.
so literature and activate. So that was a question from Tongshu Wen. Okay, excellent. Let's see other questions. Uh, okay, I think that's next one from Even Mac was a very similar question. There's one that we'll keep for later. I'm gonna, first of, so yeah, no, a question from Wei Chang. So for a first of a kind process, how do you establish suitable rule of thumb or find comparable processes to estimate the operations and maintenance cost in particular?
Yeah, that's a really good one. So what I would say, let's say I'm going to keep with our methanol example. I think that's a really good one. And so there's two ways you could do it. If it's just like you're starting out and you're doing a seed, I would say there's two ways. One is get the selling price of the commodity that you're looking at and understand that selling price is their production price, some then plus some margin, they're making money, plus some supply demand dynamics. So at least you can put a boundary around what the cost is. Like if you know the selling price is X, you know that the production cost can't be more than that because then they would be bankrupt. So that would be like I would say a way to put a boundary on it. The other way you can do it, if your technology is making something that's a commodity chemical, go to a public company, pull their annual reports, and look what they're paying in O&M and get a percentage. If you see they're paying $1 million a year in O&M and their revenue is $10 million, then you know that it's a 10% of revenue. Then use that in your model. And I think that like startups that go and do that extra mile, I would say that like I know they're trying to then at least find a comparable that makes sense in the market.
Yeah,
Also, I'd
that's
say, like, the other thing to do is, like, really at this stage is, like, I think it's a really hard one, like, what does like, a lot of these big companies, I empathize with this question because I also run into this as well. Like, a lot of their processes and economics are like how much they paid for a certain reactor, like, they don't that's not usually public information. And so a lot of us sometimes are going blind. That's why I think the boundaries are really important because we can at least get some get some, like, I would say, ranges that are crucial, and then from there start building out our own, like, more detailed assumptions. And once you scale enough, you might have to, like, lots of people then have engineering design firms, then I would say probably have more information at that level, like EPCs, et cetera.
Okay. I'm taking another question from Shiv Bhakta. Asking, so I think it's related to the top five mistakes, but maybe something else will come to mind. What are the biggest mismatches you see in company TEAs versus your adjustments when reviewing building your own?
A really, really good one. The number one thing I see is the capacity factor price of electrons. I would say that, if you look at current PPA prices for solar or wind and where they are now and where people put in their TA, there's definitely a mismatch there. So that's probably the number one thing we're correcting. I would say we're not correcting things normally like process yield. Like usually if you're running a process, even if it's at a lab scale in a batch reactor, you know what your yield is. I'm not going to say like that's not for me to correct. So I would say it's usually more on the inputs there, also replacement costs. So let's say you have an electrolyzer and an alkaline electrolyzer, and you tell me it's going to last 30 years. It's a judgment call of what people believe or don't believe, and the market's still new. But I might adjust an assumption around like replacement cost and build that into my model, and then amortize that as well. So I would say the other big one we might do, again, it goes to that system versus boundary. If you are focusing and your TEA is, let's say, it's some technology that's a metal hydride carrier, and you are essentially trying to use that into a fuel cell to make power, but you've left out upstream of that, which again goes to the system. I'm going to then make sure that I include upstream where I can get like a holistic system view of your of your TEA.
Okay, it's interesting what you said about electrons, because yeah, you mentioned that people putting like 2 cents a kilowatt hour kilowatt hour as an input, and like how far off is that from reality? Like generally, like could be like a factor of 5 or something.
For sure. I think it's one of these questions, it's so hard because, like, sure, do I think there are certain locations where you can access 2 cents a kilowatt hour? Definitely. But I think, or people say they're going to be at the margin of like negative pricing. I think it really just begs the question when you're a venture investors, like how scalable is this technology? So maybe one project
Mm.
will be able to get that type of pricing. But is this really going to be something where you can build a sustainable scaled business on that assumption? Probably
Yeah,
not.
you need base load at scale. You don't need just a
Exactly.
unique location on a small wattage.
Exactly. So I think that's probably the number one, that I would say the number one thing that we're usually questioning. And, there's definitely, I think there's been cases where there's a good reason why that can be. And so we're always open minded. As I said, it's not homework for us. Like we go in usually on a TEA is like our goal is to understand. Like that's ultimately as investors, what we're trying to do is just we're so excited by what startups are working on and what they're inventing. They're doing the hard work of building. We are just looking at what they're doing. And so it's not that we're trying to go through and delete a model and be like, that's wrong. It certainly is nothing like that. It's really an understanding exercise for us. So we can really, because again, if we think about what our goal is really just to put boundaries on the risk. So I'm not grading TEA. I'm just trying to understand the risk. And so usually in my questioning, it's just getting at that, like where are the error bars on the risk, and so we can decide as investors our comfort level across the risk profile.
Okay. Moving on to another question. So I'm not sure I pronounced the name right, but that's Part Verma. And the question is, if some startup is working on a solution which is two in one process innovation, combining carbon capture and energy storage, should the TEA be done separately or as a single entity for
If
for
it's
each process?
one technology sounds like it's one technology with two byproduct or two
Two
products,
in one.
yeah, then it should be together for sure. Normally when I see something like, I mean, unless there's a good reason, Yeah, I mean, it's a system level question. So for me, I would model that, and this is a subjective case. So I would model that together because you're either one's going to be a waste product or you're going to valorize both. But either way, if the waste product's got to be into your TEA, and if you're going to valorize both, then at least we can see that there's going to be some shared system boundaries that they both of those outputs are going to have. So there makes no sense to model. I don't think it would make sense to model them separately if I'm understanding it right.
Okay, I have another question. I see about natural hydrogen from a Kartik Salvan. So, in the case of an explosion of natural hydrogen extraction and production, should the TA be based on something known like oil and gas?
Um, I don't think I don't think if I fully understand the question. I think if you're building natural hydrogen technology, I would say your TEA needs to reflect your system and your technology. If you have corollaries with like drilling that are with oil and gas that you want to say like this particular thing hasn't been built yet, but it's like really similar in X, Y, and Z to what is like already commercial in the oil and gas fields. I'm going to leverage what we know about those costs in my own TA. I think that's fine. That's a fine, and stating those assumptions is also fine if you can back it up. I don't have a problem with that. But I would say try as much as you can to have your TA reflect at least the knowns that you have about your process, and then where you have unknowns, like certainly having market comparables is really helpful.
Yeah, maybe I'll add a quick call on that because we had one speaker at the summit from Coloma, the founder of Coloma, that focuses on geological hydrogen. And essentially, his explanation of what they were doing was saying that they're basically an exploration company. And so they focus on exploring in the right spots, using new approaches, also satellite imagery and all kinds of things to to basically try to get up to speed on how do you explore for hydrogen, which is something people haven't done before at scale. But then the extraction technologies are all, in a way, fairly known thanks to oil and gas in general. So it really positions this company as an exploration company. And I think in this particular case, this is all about probably modeling how efficient and how quickly you can learn and how long it might take to find the source after evaluating better and better, and that will come with experience, and that's something they can probably estimate some way. But in a way, the cost of extraction is not the most difficult in that case because they're using known technologies.
I think that's right, and I would agree with Pete on that. So I think that's a great example where there's parts of that. It sounds like what he's saying is there's parts of that process that are known, and then there's some unknown knowns, and so or known unknowns. Sorry, and so I think you model what you can, and then you borrow what you can, and I think as you grow in your technology and you learn more, you can refine. As we said earlier, the techno-economic model is really there to be a living document. So as you learn more and do more and refine more, you update your model. And it's this really iterative process. It's not meant to be like a static thing that you just have to get done because your potential investor asks for it. It really is actually a tool for the startup in order to refine their inputs as they grow in their technical development.
And should I'm kind of paraphrasing one question by Oliver Shafat, who's asking, should the TA be based on the current scale or based on some assumption of scaling? So is it a picture of now, a picture of the kind of the end game, or
It's a
should you do
great
both?
It's a great question, and I would say at a minimum, I would have if your TA is dynamic and it's because you have your inputs that are independent from your outputs, then I would say it's a pretty easy thing to have like a now and future because as I mentioned earlier, very few TAs I would say look competitive economically to the market prices today. And so if you were just to show an investor, here we are today, then you might not be selling the vision or the dream. And when you're a seed company, you're selling a vision and a dream as well. And so I would say that the important thing to do is know where your inputs are today, know what your sensitivities are today, and show it at scale. You'll have to do some engineering rules of thumb in order to build out a scaled model or, borrow from comparable industries. But I think it's the most important thing to keep in mind is what you want to be able to convey to your investor is that here's where you are today. Here's where you need to be in order to have your production costs compete in the market. And here's how I'm going to get there. And I think that's really the pathway of how you're going to get there lies in the sensitivities of your model.
Okay. I'm going to pick another question from Tongshu Wen, who's asked, so because you mentioned that TA is a living tool for founders, but the question is, what are the times where you should make changes and update it? What kind of pace should you have for that? Is it just when you have a new VC investment conversation, or is it as soon as you discover that something, one of your assumptions can be refined or should be updated?
Yeah, I mean, I remember if you're really early on, the TA is not this multi-tab exercise. I would say that when there's something to update, you update it. I don't think I don't think you update it just because you're talking to an investor, because again, it's not a marketing tool. It's supposed to be a technical tool. So I would treat it as such. So let's say you have a process and a key input into your process, you make a big breakthrough in the lab. Let's say it's your catalyst and your yield was 10% and now your yield's 90%. And that's a huge techno-economic lever onto your production cost. Certainly you should update it and immediately, because like I would imagine the team as well will be really excited by that technical innovation. So yeah, it should be updated when there's something to update. Certainly, I wouldn't treat it as a marketing tool just to update it for the sake of updating.
Okay. Other question from Shiv Bhakta. What are the best practices for integrating TA insights into financing discussions, especially for first-of-a-kind facilities, especially when you're talking to investors who might be unfamiliar with the risks and uncertainties of scaling emerging technologies? I have a first reaction is that if they're unfamiliar with the risk, I'm not sure they're the right people to talk to. But
Yeah, actually, that's what
what's
I
your
was
take?
thinking. No, that was what I was thinking about. I was like trying to find an example of like, um, maybe, and obviously, I'm trying to read your mind here, but I would say that like most people, if they're investing in hard tech and climate, they might not appreciate. I would say they should understand there's some risk. They might not appreciate exactly like how to put error bars on that risk yet until they talk to you and they start looking into it themselves. But I would say I'd be surprised if like, I guess, like, what I'm trying to ask myself is it your job to I think it's your job to tell them how you're gonna, retire risk and how you're going to, you know, like, here's my technology today, here's the risk that I have, and then here's how I'm going to retire them, and I would say having an understanding of, like, are they gonna be risks, like, is where it's like, we call, like, must believes here. So is it something that you think that it's, like, a fairly easy risk to retire, or is this gonna be, like, really difficult? But I don't know if that's your first intro call with an investor anyway. I think your first intro call with an investor on a new technology is really, like, you wanna sell like, the pain point in the market, what your technology is, how it compares in the market. We like to see some version of a techno-economic slide that shows me how your cost down pathway looks like. And then I would say competitors. I think once you start getting into the weeds with an investor and they start really trying to hone in on where are the risk, where is it scale up risk, is it science risk, is it engineering risk, like all the above. I would say then like that's when your job is as part of a company. I would say in my view, it's a partnership. I look at this as like, again, we're just trying to understand. And so I always, when I'm in diligence with a company, my focus is really on understanding their process and working with the founder to try and understand as best I can. So I can go back to my investment committee and say, here's where I see the risk. Here's the certainty I have on how they will retire those risks.
Okay. Talking about risk, there's one thing that also evolves quite quickly is regulations. So there's questions from Shiv Bhakta again. about how you incorporate evolving regulatory frameworks into a TEA. So any thoughts on that?
I mean, if you're talking about some kind of like the IRA or if there was like a carbon price or something, I think you certainly can you should incorporate
Or,
that.
or could
With
be zoning, permitting, all kinds of
um,
other things.
yeah,
But
I
yeah.
would say this like exercise of like having something in a simple model. I certainly don't put in zoning or like a good example would be like in mining, right? So mining, like one of the biggest challenges besides is permitting. I don't know. That to me isn't a TA question. I think it's a market question. I think it's a value
Mm,
prop question, but I don't necessarily. It's not obvious to me where is like zoning or permitting would be in the model. It's certainly a macro factor that we're going to think about as an investor and a startup should be thinking about, but I don't see a natural fit in the model. The model is really a technical model to understand the technical sensitivities and limits. And so I would say something on the market side is almost certainly probably less relevant for TA unless there is like, government support for something. I've got thoughts on that as well, when not to include it in a TA, but I think then you can at least speak to those supports and sides as well.
okay. Okay, there's some some questions. I'm sorry for those of you who wrote very long questions. I don't have the time to read a long question, unfortunately. So if you want me to address your question, make it short, because otherwise it's a little bit unwielding in this format. Um, uh, okay. Uh, duh, 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 duh. There was a question about whether what kind of a if you've done some postmortems of some TEA and what you learned from that, maybe let's say a 5-year-old TEA. There's another question here.
Yeah, like a postmortem on TA is what have I learned?
Mm,
Yeah, I think one of the ones that, as I was learning, and I'm still learning, I should say, every day, because, founders are like, all, no, very few technologies are the same. And so every new process is a new experience for me. And I would say my caveat, I think I am always still learning. What I would say, like, is as I've gotten like more fundamentals and stronger and certainly seen a lot more TEAs, one of the I guess most maybe it's obvious in hindsight, but like actually important things I've thought a lot about is when you have a system that's comprised of several steps and thinking about how inefficiencies can compound across steps. And so I would say really goes back to the system level type analysis and why that's so important. I would say, as a chemist and definitely like a fundamental organic chemist, I was really thinking about like one little bond I wanted to like substitute or for a different atom, and it certainly is not a system level thinking that at least I have in my training, and so that's something that for me, like in the TA world, is really like yes, at the fundamental level, that's also what that part's important in a TEA because it essentially drives these macro metrics that we're talking about. But I think really the system level part is like the biggest I would say, part that I've learned a lot about and the importance of it.
okay. There's another question from David Uer, whether you include ecosystem cost in the profile, and he's talking more about the ecological costs, such as water use and other things like that for TAs.
I think that it depends on how, like, if we're doing like a very simple top line model versus how detailed, but fundamentally, my answer to that is it a sensitivity in your model? So a good example would be like, let's say, like water electrolysis. Like, I do put the water input into my model, but water is not a sensitivity. The cost of water is not a sensitivity, or I should say it could or could not be, but let's say if it is a sensitivity, it should be in the model. And if it's not a sensitivity, then I think it's a judgment call where if you feel like it's a big input into a process, even though it doesn't move the lever, it feels remiss to not include it, then include it. If you're talking about more from an environmental standpoint, so again, we'll go
Yeah, I
into
think that was a question more
okay,
along
if you're
those lines.
going from a mining, yeah, like the social cost. What I would say on that is It's still a very similar answer. If like the water, let's say in the mining example, if water usage is a big cost center for like the state of the art process, and you're developing a technology, let's say, is no water, then ignore like forgetting the social impact of water and the environmental impact. I would say that that would be a good thing to point out, like because your process is better from a techno-economic perspective if it's a sensitivity. I think that if it's just that it's an environmental impact and it's shows like the ESG component of your technology, I would say that's probably on like your ESG type slide, or your GHG slide, as opposed to your TEA slide. The TEA slide really is about modeling a process and the sensitivities and the limits, as opposed to the environmental impact. And then I would have the environmental impact as a separate slide.
Okay.
It's a
So
good
that
question.
doesn't typically go into the TA then.
Yeah, I mean, it can and can. It really depends if it's a sensitivity in the model or if it's a key input into the process, I should say is a better way to put it. If like the water usage is a key input into your process, then it should definitely
Yeah.
be in your model. Whether it's a sensitivity or not is actually wouldn't matter. If it's a key input, it should be there. And
Mhm.
then the importance of it being there really is it a sensitivity or not?
Okay. We only have a few minutes, so I think we have time for maybe two more short questions. So, a question from Eric Deering. Can you expand on what you just mentioned about when and how you would represent government subsidies or tax credits in the TEA?
Sure. I mean, I think the best way there's actually several ways you could think about it. Like, so a good example would be sustainable aviation fuel, where there is a lot of tax credits that can help bring down the cost of that. So what I would say, like you could imagine a couple scenarios. One is in your techno-economic model, you build it out just like kind of the simple example that I showed. And let's say you have a process that then shows $10 a gallon, and then you could imagine a couple of things. You could then just have like if let's say if the government subsidy, we're making up numbers, I don't have them off the top of my head. Let's say the government subsidy was $5 a gallon. You could simply just imagine like a bar chart where you could like show like here's my production cost and like a waterfall chart, and then like $5 a gallon's government subsidy. So my net production cost is $5 a gallon. I've seen it like that, and that's acceptable. Most investors investing in this space were pretty familiar with all the subsidies out there from the IRA and other programs. And so it's not, we certainly include them in our own assumptions, depending on, again, how firm of a subsidy it is. So I could see that or you can just do your production costs, and on the slide you have tax, and you're like, and with whichever subsidy you're looking at, this actually it brings down my cost to, why. I think all of those are really fair, especially, you can imagine green hydrogen as an input into many, many different chemicals and processes. And so if you're getting the $3 a kilo green hydrogen subsidy, then certainly it brings down in your hydrogen costs. And if hydrogen's an input into your process, then that's how you can defend whether or not you're going to say your hydrogen is $5 a kilo of hydrogen or $2 a kilo of hydrogen. So I would say, I would say just like be explicit in how you modeled and what subsidies you are incorporating and why. But lots of investors in this space are like there's lots of subsidies that are not hard for us to believe. We're on board.
Okay, I have like maybe two more quick questions, and let's try to fit the answers in the few minutes we have. So you mentioned questions from Matt DeRoche. You mentioned ranges in the TEA, but most models use a deterministic set of values for assumptions to calculate operating cost economics. So what's your ideal way to review the range of assumptions in the TEA?
A
You
tornado
have
chart.
Okay, that was actually what I think Matt was mentioning, tornado diagram or others.
Yeah,
So
just show a tornado chart and then show the ranges there, and that's how we do it. So I would say I would just do that.
excellent. Okay, last question. I'm going to go with something very specific. The last question is from Lydia Kuti. We are in biotech using carbon feedstock in our fermentation system. At commercial scale, we'll upcycle waste products from the food industry, but at first of a kind scale, we calculated with commercial carbon sources as a worst case. What would be your thought on this?
This is like it is pretty detailed, and I'd have to probably ask a couple follow-ups for this one, so it's hard to say. what I would say, it sounds like you're putting a boundary on what your worst
Like,
case could be.
yeah,
Like,
basically looking at the carbon commercial price as the most expensive option as an assumption, whereas down the road there will be upcycled waste at a cheaper price.
oh, I see. I think that's a really I think, honestly, erring on the side of being conservative is great, and you can always say, like, don't undersell yourself. You can certainly, if you've got good reason why you think the carbon price is going to go down and why because of a change in feedstock, whatever it's going to be, I think that is great to put on your slide and make that known. And if you wanted to have side-by-side bar charts, we're saying in the future with X feedstock, this would drive down my cost. I think you have both, say the words, speak to it in an intro slide. But I do think that the if the carbon price that you're paying today is your worst case, but it's at least a volume price that you can really tangibly put in your TA and sensitize. Again, that tornado chart would be really helpful, and you can put it there as well.
Okay, excellent. Well, I think that's all the time we have today. We'll maybe keep a minute if you want to give some final pieces of advice to our audience today.
Yeah, sure. I mean, I just like thank you so much for joining. I think, as I was saying to Ben, I think it's like the wonkiest title ever, like Techno-Economics. We do really find that it's important, and I would say I hope that this has been even a little bit helpful, even if it gets your thoughts around it. And I would say the last thing is, like, most investors, all investors, we're just always trying to understand. And I think our diligence and questions around TEA, I would think it's really about partnering with startups and trying to understand their process. And so looking forward, if anyone's got technologies that they're excited to talk about, looking forward in the future of meeting people and talking to them, and certainly talking through TEAs.
Excellent. So, and what's the best way to reach you or your team?
The best way to reach me would probably be, that blasting out my email right now, is on LinkedIn. I'm very active on LinkedIn, and then certainly I can respond and go from there.
Okay. And so, and the best business card is to send you a beautiful tornado chart.
Honestly, that would actually make my day.
Excellent. Well, thanks, Melissa, and thanks to you, our great audience, for all your questions. So this session has been recorded. So if you want to rewatch it, you can go to the SOSV channel on YouTube. We still have a few breakout sessions going on tomorrow, and we also have still ongoing larger matching events between investors and startups. I think we just passed 1,000 startups registered to that event and 700 investors. So hopefully you'll find a few that match what you're doing in terms of category, geography, stage. You're welcome to still register. Time is short, but you might still get something out of it. To do so, you just go to sosvclimatech.com/matchup. And that's it for today. Thank you very much, Melissa, and have a great day.
Bye, everyone. Thank you, Ben.